15 Minutes Trading Cheatwall by Trade Rocket Academy. Trading and investment in financial markets can be risky and stressful, but knowing the alphabet of trading and improving your trading skills can turn it to a stressless fun with minimum risk. This 15 Minutes Trading Cheatwall gives all the ingredients you need as a beginner trader. Let's start this by seeing the main differences between investing and trading. The main logic behind investment is buying the right financial assets, such as stocks of a successful company, and holding them. The goal is earning profit over an extended period of time from the annual or similar profits of the company. In general, investment can have a very small risk with persistent profit, especially if you go for the stocks of dynamic and successful companies. But the overall wealth starts noticeably grow over an extended period of time that sometimes can be several months or even years. Unlike investments, active trading follows the same rule, but it's based on a complete different strategy of earning profit. The main logic behind trading is buying the asset when the price is low, holding it for a relatively short period of time, and selling it when the price is high. Trading can be very profitable, but it can be significantly riskier than the general investment if your trading knowledge is limited. Therefore, it's crucial to know the game rules to make decisions with maximum success rate. The first step of any trade is to know your options and examine the candidate financial assets carefully. You can pretty much get all the available information about your candidate stock or cryptocurrencies by looking at the key data of these assets on source websites. One of the best sources for the key data is Yahoo Finance. It's free, easy to use, and it has pretty much all the front information you need for a trade. For example, this is the summary table of Apple's stock that is on Yahoo Finance. There are many parameters here, but let's take a look at some of the most important parameters of this table together, one by one. Previous close is the last traded price of an asset during a certain time frame. For example, if you are looking at the daily prices of Apple stock, the closed price is the last price of the stock at the end of the previous day, before the exchange close. Open price is the price of the security from the first trade of the day on the exchange. We will see a slightly different application of open and close prices later. Days range is the total daily variation of the security. Volume is the total number of shares of a stock or amount of cryptocurrency traded in a given time frame. For example, for this daily data that you're looking at, the volume is the total number of trades today. The market cap can tell you how much a company is worth based on the current market. Beta is another parameter. We will have another video for a complete explanation of how beta works, but for now, remember, the beta factor tells us about the correlation between two financial assets. A popular way of using beta is evaluating your desired financial asset's performance in comparison with the overall market's momentum. In other words, beta can tell us about how your desired stock or cryptocurrency is changing with the market as a reference. If it's 1, then the change of momentum of your financial asset to the market is 1-to-1. If the number is greater than 1, it means that your stock is more intensively reacting to the market changes. And when it's lower than 1, it means that the overall changes of market has a less effect on your asset. Beta can have a wide range of values and can even be a negative number depending on the nature of the asset. In another video, we will talk about how you can use this important factor to improve your portfolio. PE ratio or price to earning ratio is literally the ratio of market value per share over the earning per share. One of the applications of PE ratio is using it to see if a financial asset is overvalued or not. And finally, EPS, or earning per share, is the company's net profit over the total number of its common circulating shares. We briefly covered some of the most important key data of a sample stock on Yahoo Finance. But there are many other platforms that can be used for collecting the same data. You can directly go to the exchange's website, or even go to the other platforms such as Google Finance, but you can see that the key data are more or less the same as what you would see on Yahoo Finance. These kind of platforms are perfect for a stocks market. However, for crypto markets, there is another platform that its features are more complete than the mentioned platforms, CoinMarketCap. On CoinMarketCap, not only you can get the financial data of different cryptocurrencies, you can also see some automated technical analysis of your desired crypto. In general, trading based on your own technical analysis has the highest success rate. But if you don't want to spend a significant amount of time on personal analysis, this automated tool can be a good complementary to your trading strategy. And even if you want to do more detailed analysis, by clicking here, you can go to the Into the Block platform that provides a lot more tools for technical analysis. Therefore, the overall MVP websites for collecting the key data of your desired cryptocurrency or stock are CoinMarketCap and Yahoo Finance. In the next part of this video, we talked about some of the most important trading terms you will need as a trading starter. Close and open prices. This time, from a different point of view in a practical example. This is the daily time frame of Bitcoin to USDT. Look at the way the prices are shown. This is called candlestick chart, and probably the most popular way of looking at the price chart of an asset. Each candle shows the price changes of an asset in a given time frame. For example, here, the time frame is daily, so each candle shows the daily price changes of Bitcoin. When it's green, it means that the price of your asset has increased since the start of that certain candle, and when it's red, it means that the price has decreased since the start of that certain candle. You can better understand this concept by adding the definition of closed and open prices. Open price is the price of your stock or cryptocurrency from the very first trade that happened in that given candle. And the closed price is from the very last trade of the candle. This means that when the candles are green, the open price is the bottom of the candle, and for the red, it's at the top of the candle. And similarly, the closed price is at the top of the green candles and bottom of the red candles. The other important feature of candlestick chart is the top and bottom shadows or candle wicks. These represent the high price and the low price of that single candle, meaning that during that period of time, the price had tolerance within the high and low prices, but eventually closed within that. The next important term is the bull market and the bear market. The bull market is when the market is healthy and behaving properly, it's on the rise, and a strong ascending price trend is visible. And the bear market is when the market is shaky, the candles are declining, and a solid descending price trend is visible. The next important term is a resistance and support. Resistance and support levels are the regions with the high probability of forming a reversal in the chart's trend. Any trend in a chart, either an uptrend or a downtrend, has to stop at the point that the amount of supply and demand is balanced. Let's take a look at one example together to make a concrete understanding of resistance and support. This is the daily time frame of Tesla's stock in US dollar. When there is an uptrend, it means that there is more demand than the supply in the market for that asset. This trend continues until the point that the overall demand and supply are balanced. This balance point is a resistance level. Now, if the demand's flow keeps its strength for a period of time and even amplify itself and break a resistance, then the uptrend continues until the next resistance level. This process keeps happening until the point that the overall supply beats the overall demand and causes a reversal in the trend and decreases the price. Similarly, when you see a downtrend in a chart, it means that the overall supply is stronger than the overall demand. Again, the trend continues until the point that the overall supply and demand are balanced. This balance point is a support level. Now, if the supply flow keeps its strength for a period of time and even amplify itself and break a support, then the downtrend continues until the next support level. This process keeps happening until the point that the overall demand beats the overall supply and causes a reversal in the trend and increases the price. A bonus tip: if you look closely at the chart, you can see that there are some regions that look like a resistance or support level, but they were not as strong as the main lines we drew here. We call these local resistance or support lines. In our other video called How to Draw Resistance and Support Like a Pro, we explained how you can efficiently draw support and resistance lines and also explain the exact role of local resistance support lines. But for now, just think about them as a weak resistance or support lines. And the last tip, a certain level can be a support line at some point and a resistance line at another point. So it's important to keep track of their exact role at all time. The next term is probably one of the most important trading terms, trend line. A trend line is a line that professional traders draw at the pivot points of the chart in order to define the general direction of the chart's movement. Let's take a look at an example. This is the chart of euro to Canadian dollar. This is a very good example of a bull run. If you look closely at this uptrend, you can see multiple testing of a dynamic support line right below the chart. These represent the trend line of this chart. The reason trend line is extremely important is that not only it tells you about the general trend of the chart, it can warn you about the possible changes of the trend. In fact, when candles break a strong trend and form closed candles under the trend line, a follow-up downtrend is a very likely scenario. Now let's take a look at an opposite example. This is the 4-hour time frame chart of Tesla's stock in US dollar. Look at these 5 locations that clearly represent a decreasing trend, or in other words, a bear run. We have a trend line here, and similar to the previous example, when it breaks, we have a significant increase in the price. Make sure you're comfortable with the definition of trend line, as it can be a huge advantage in your trading strategy. The next term is indicator. Indicators are mathematical and statistical calculations based on the general properties of an asset, such as its price, to forecast the future trend of the asset. Some of the famous ones are relative strength index or RSI, moving average, or unbalanced volume. The famous indicators and also the way to use them will be explained in the future videos. Finally, the last term is trading strategy. A trading strategy is a systematic methodology based on your preferred and predefined trading techniques and criteria for buying or selling your financial assets in a market. The basis of any trading strategy is usually all the above mentioned terms: the exact location of resistance and support lines, price trend, and help of indicators. A bonus tip: let's take a look at an instant application of these topics. This is the daily time frame chart of Apple's stock in US dollar. We have a bull run here, as we can see multiple bounces from an upward dynamic support. Therefore, we have a trend line here. One of the most famous trading indicators is moving average, or MA. The concept behind this indicator is that if you average the price of an asset over a given time frame, you can get an idea about its short-term or long-term behavior. Here, I drew a moving average line with a 100 period. What it means that each point of this yellow polynomial is an average of the closed price of the last 100 points, or in this case, 100 days. The yellow line is clearly upward for a long period of time, which suggests we are in a bull run. But more importantly, if you look closely, you can see that the bouncing points are in fact from these certain points on the moving average line. In other words, the moving average line is acting as a dynamic support line right below the chart. Now let's make it even more interesting. This point is where the chart breaks not only the trend line, but also the moving average line. A breakage of a trend line warns us about a possible decrease in the price, and the extra breakage of the moving average line confirms that idea, and we can see that shortly after the breakage of both lines, the price decreases significantly from approximately $33 to near $23, which is almost a 30% decrease that we could forecast beforehand. Finally, let's take a look at some of the best trading tools. There are many platforms for technical analysis of stocks or cryptocurrencies, and here we compare some of the most popular ones. TradingView is probably one of the best websites for technical analysis of a financial asset. TradingView has multiple types of membership, but its basic membership is completely free, and to be honest, the free version has an incredible number of features, and unless you want to do a very intensive technical analysis, the basic membership is definitely a very good starting point. TradingView has its own community section that people with different amount of trading experiences share their ideas, suggestions, or analysis on the page. The best part of TradingView is its price charts for different financial assets that are highly modifiable. They also come with a very complete library of indicators. Overall, the whole website and the charts features are very user-friendly. The other popular platform is Yahoo Finance. Similar to TradingView, the basic membership of Yahoo Finance is free. The biggest plus for Yahoo Finance is its very complete set of key data for different assets, but the other features are relatively similar to TradingView. So a possible combination for you can be using Yahoo Finance for collecting the key data of an asset and then using TradingView tools for fine technical analysis. These two websites were among the best platforms with lots of great free tools that let you do a world-class trading analysis. But there are some other platforms that you can use and compare them with each other to find the best fit for yourself. Google Finance, StockChart, and Finviz are few examples of some of the other popular platforms. Thank you for watching this 15 minutes trading Cheatwall. Subscribe right now to find out about our new videos as soon as they are released. And don't forget to comment below all your possible questions about any parts of this video, and also let us know if you would like us to cover any specific topics in the future videos.